All right, everyone. It's Monday at a little bit after 10:30, and I wanted to post this video to give you a bit of an update. Looking at the market, the pound rather, on an hourly bar, you can see that it's forming a bit of a trading lane here to the upside. If we zoom out here on the 4-hour chart, you can see part of the reason why is the market is dealing with this past resistance area here. Remember, this is from April when the market broke to a 15-year high. Recently here in July, it broke to another new 15-year high, but it's dealing with this prior level. Now remember, the reason why the market deals with these prior levels is there's a psychological reason for traders to have sold the market here. So the traders are going to be dealing with a similar experience, especially because over here you can see when the market broke through here before, it was a very aggressive move, and this is a tried and true technique of the professional traders to lock people into their trade. So if someone had been looking at going long over here or was looking to sell over here, by blasting, and more importantly looking to sell, by blasting through this resistance area, they don't give people a chance to go short, or those who do go short, they're looking to gun for their stops. And you can see the market spikes up, comes down, retests, spikes up again, comes back down, and then when it breaks through again, blasts through. Again, this is taking the people who maybe bought over here on a possible breakout, trying to lock them into a bad position. Remember, people, and this is in all walks of life, whether they're rookie traders, professional traders, people in general have a hard time reacting when the market moves very, very quickly. They tend to want to hold on, and they tend to want to, hope that the market will come back, especially when you see a very fast move down like this. This is why you'll see the market make these momentum moves as it's breaking through support and resistance. Now let's talk a little bit about the market in here. It's tough for me to give you a distinct level that I'm looking to trade at because these levels are going to change. The market action right now is not conducive to just sitting back and trading set and forget. It's a very slow market. There's not a lot of news out for the U.S. this week, and there's no news to speak of for the British pound. So you're probably going to see the market trade very, very slowly this week, most likely between this trading lane here. Although on the 11th, we've got Bernanke talking at about 1 o'clock. And then on the 13th at 8:30, we've got U.S. retail sales. So there's going to be some action later in the week, but right now I really think it's just going to be very quiet. So we've got to take that into account. Now, of course, looking to enter on a trade over here, this is where I like to use the 3-bar reversal. When the market comes up to resistance here, that's when I start counting. It's not an exact science. Because the resistance is going to depend on where the line is. So when I see this bar here getting up here to resistance, this is where I'm going to start my count. Now it's also important to realize that when you're counting backwards, you want to make sure that you're keeping track of how far away from the resistance area your eventual buy or sell point gets. This is what I mean. If I start my count on this bar, I'm counting back 1, 2, 3, and my low is way down here. Now, if I'm going to go short there and my target's here, that's just crazy because my stop's going to have to be somewhere up here. So I've got to keep track of where the low is. When I count, when this bar closes and I count back 1, 2, 3, again the low is still down there, way too far. This bar here, 1, 2, 3, low is still here. Count this bar, 1, 2, 3, low is still here. This bar here, 1, 2, 3. Now I've got a low here, but again, I've got to keep track of where that is. Let's go ahead up to resistance, count down, 20 pips. That's just too far. So at this point, I wouldn't be looking to trade as the market breaks below this low because it's just moved too far, especially considering that this entire channel here is only about 50 pips. So you got to remember that if you're already giving up 20 pips, that's just way too much. So what I might do is start tracking the lows and trade on a little dipper retrace, which means going short here at the 618 level or going short here at the 786 level, depending on the momentum. So you can see here, had you gone short at the 618, the market made double bottom, then a triple bottom, then started working its way up. when you see this kind of momentum come in, especially on these kind of narrow channel trades, this is a very good opportunity to just exit at break even, or if the market moves enough, let's see here, no, it was only about 10 pips, wasn't quite enough to take profit. But when you see the market break back through the 618 level, this is where it's an opportune time to just get out. You can see the market came back up here to the double top and has moved off slightly. So at this point, again, that's why these types of trades are very tricky. It's why this is more of an advanced trade, and I don't highlight these because the entry points move around, and you've really got to be watching the market. But if you can watch the market, these types of trades can be very profitable because they offer very low risk. For example, entering here and stopping out above these highs is only about a 17 pip risk, with a potential reward here down to about just below the 2.0120 level of 30 pips. So you can see here you're still at about 2 to 1, but you have to be very fast and you have to be willing to get out as soon as the market breaks above these two highs here, or above the line. So anyway, that's the setup for now. We'll have to keep an eye on what's going on with the market. In a longer term sense, I'm keeping my eye on this steep trend line here, because if the market breaks, we might get an extended move down, possibly into this level down here, about 2,100 or 290, to catch support again.